Do you have to pay taxes on death insurance money? In this video, we're going to talk about life insurance, we're going to talk about death insurance, we're going to talk about the death benefit. The only way that you could screw this up. So there's two ways. You go to probate or you cash out your policy. Those are really bad things to do. So don't do them. Get a pen and paper. We have a lot to talk about today. So 4 specific things I'm going to talk about. What is life insurance? And now we define it very differently because number 2, I'm going to tell you what death insurance and then a death benefit. They're very different. Number 3, how do you qualify? What's right for you? And number 4, do you have to pay tax on any of this? You're going to want to know and stay to the end. You're going to be shocked at the dollar amount that you do not have to pay tax on if you set it all up exactly like I'm going to tell you. All right, before we get started though, I got to just remind you this is all education. So this whole channel, right, The Millionaire Maker, Loral Langemeier, is dedicated financial literacy 5 days a week, 10 to 15 minutes a day. So make sure you subscribe. And it's all education. I'm not giving you advice. I just know a lot of stuff. I've been doing this for over 2 decades, a long time. So what is life insurance? Again, I'm going to read definitions just so we get it all on paper here. Life insurance, right, specifically the way not to be used with death, which is term, by the way, just to get that out of the way. Life insurance with living benefits are policies that include living benefits, which is cash value, and then death benefits. So when you pass, all that money goes to whoever you want it to go to. So death insurance is usually term insurance. And what's so interesting, if you're watching TV or any ads on any show or any channel or any live stream, most of the ads you see are term insurance, and you qualify for $250,000 or $500,000 for $20 a month or $11 a month, something cheap. Well, cheap is what you get, because if you outlive it, and here's the biggest challenge. I'm just going to get that one out of the way before I even go to like the depth of life insurance. I want to you just don't want death insurance. In my opinion, it's a waste of money. There's maybe 1 or 2 reasons why you'd want to have some term, but here's the problem. You're going to qualify and say you have a 20-year term and you qualify when you're 25. Well, then you're going to what? That policy is going to be done at 45. If you had any injuries or illnesses or anything, now you have a pre-qualified condition, and you have to go in through an entire physical exam to re-qualify to go again. So, and I don't know that there's really death insurance, term insurance policies that go beyond 20 years. Now, you could start, if you don't have the capital, you could start that way, but boy, soon and early, while you're healthy, flip that into a real life insurance policy. It is important. So, why should you have life insurance? Well, it actually can be a bank for you. That's probably what I like the most. So, you can put money into a life insurance policy, you can pay in a monthly premium, whatever you're going to pay. And you get to borrow in the kind that we use up to 90%. Now, some other policies are going to let you borrow 20% or percent of the whole policy. And that also depends on the death benefit. So if you actually qualify for $1 million, $2 million, $5 million, like I have clients right now that are making hundreds of thousands in their business, hundreds of thousands, not millions. But to pass on and create millionaires for their next generation, they're super healthy and they have qualified for a lot, like millions of dollars of life insurance that upon their passing through a trust, right? Because without a trust, you're going to go to probate, and then this doesn't work. So that kind of insurance passed on could create millionaires of your next generation, but they better be reading my book, Make Your Kids Millionaires, on how to do this right. You have to have education. They got to have a plan. You're just not going to hand millions of dollars to your kids just say you did it, just because you're healthy and young. Life insurance does cost more per month, but you're also building it as an investment. So you're building it as an investment. You can borrow against it during its, during your lifetime, and you can create the cash value. You do have to pay interest on the loan that you pull back. Depending on the policy, you can actually help define that interest rate. And in an interest environment that is crazy like we're in right now, why wouldn't you have more control of all your money? Again, your financial literacy has got to take one of the top goals in your life right now, because we're in a very interesting economy. We've got crypto, we've got NFT, we have all this stuff going on. And if you're sitting out there in the 1930s and 40s, thinking, Ward and June Cleaver like around money, which is how most people are taught, you're in a huge disadvantage. And it's not that like I know anything more, I'm more committed to learning. So again, subscribe to my channel right now. Click that notification button every morning. I want you 10 to 15 minutes, just watch my video. Take down a notes, have a little journal. I have people who have journals about all their learning and financial literacy and the things they need to do to get their foundation reset. Life insurance is a huge, huge thing. So people who die not millionaires or just barely millionaires can pass on millions through this process of having proper life insurance through the death benefit. So you're not going to go to the internet, I call it the bathroom wall, because you can write anything you want out there about anybody you want and anything you want. There's a lot of misinformation out there, and the pandemic exploded it. And there's a lot of scams around insurance, tons of scams around insurance that actually aren't even insurance companies, but they're getting you to pay 10, 20 a month. You get enough ignorant people to do it. You make a bunch of money, you shut it all down, and you actually had nothing. That goes on over and over. So please let us help you do it right with the qualified and reputable companies. There's reputable companies in all of this financial services world, and there's a lot of scams. All right. So the good thing about life insurance, really done right, where you're the bank of it, the money never really leaves your policy. You're really borrowing with the company to get your loan. And then with that, you can go out and buy real estate. You could go buy some gas and oil wells, which is rocking right now. The price of oil is phenomenal. You can go buy some cryptocurrency. So a lot of you're not diversifying in your asset classes because you're like, well, I don't have enough money. And you're sitting on one if you have done it right. So as young as 22, 23 years old, I'm even going to say as young as 18 for those of you that are super aggressive, you can start getting these policies, park it, really have your own bank where you can borrow against it and then pay it back. It never leaves your policy. You have to pay interest on the money you borrow, but it's a built-in bank. So let's talk about the death benefit. So upon death benefit, which means when you pass, what's going to go on to your heirs? Well, first of all, again, if you do not have a trust, you're going to probate. What does that mean? Your state's going to oversee your entire estate. And at the end of this video, I'm going to give you a video that Scott, my partner, and I did on don't let the state take your estate, right? So a lot of you, if you want to protect your estate, a will is not enough. You have to have a trust. And if you really want to do it right, it's irrevocable. So irrevocable is a family living trust, and irrevocable, it's not changeable, but it's the big daddy of them all. So again, I'm going to leave that out there for a moment. We'll come back to it. The death benefit is what I want to talk about. The death benefit of your policy, believe it or not, right now, $11.2 million per child can go tax-free. That's how much you can pass on. So if you're healthy enough and young enough and you can afford the premiums every month, you can pass 11.2 million on to your kids. So when I say make kids millionaires and it's only a 1, 2, 3, 4-step process, for some people, that was the play they needed to make because they didn't learn this till late in life, and they wanted to fix it. So how do you fix it late in life? When your big income earning years are over, well, you either figure out how to make a heck of a lot of money where you qualify for a good enough premium, or you qualify and you pass on to your heirs. The death benefit is critical, run through a trust. Now, let's talk about the big one. What's best for you? I want to go through a few benefits really quick on what's real life insurance, okay? Real life insurance during your lifetime, right? As well as paying on when you die. There's no loss provisions. There's no guaranteed growth, right? So this is some of the benefits. I know some of you want to have questions. There's no risk, as close to zero as you can get. I mean, you're really banking on your own life. Can you get liquid assets when you borrow back against? You can. And you can have immediate cash, which, who cares like in a catastrophe, borrow back against your life insurance policy. It's tax-free, tax-deferred growth, similar to a Roth. It's like a line of credit. Think of it that way. It totally protects you from creditors. Welcome to O.J. Simpson. That's all I'll say about that. And it can be collateral used for other loans, believe it or not. So it is not litigation proof, depending on where you go in litigation. But I can tell you, it is an entire asset class that I think is overlooked. Because when people think about investing, they're thinking the stock market and real estate. You don't think life insurance. So you got to get life insurance up as one of those, I'm going to say really stock and block core assets that should be in your portfolio as you grow. Now, do you pay taxes on any of this? So when do you have to pay taxes? Upon death, again, done right, I think I've said it 5 times in this video, it has to go through a trust. If you go to probate, you're going to not only pay tax, you're going to pay estate tax. You've got all sorts of problems in that model. So if you're with a lawyer or an accountant or somebody who's saying that a will's good enough, they're wrong, completely wrong, and you got to call our office immediately. We'll send you to our expert teams who are going to tell you how to do this properly. The only times when you pass that you're going to have to pay tax is on the interest income. So say you borrowed a bunch and you went out and did some real estate transactions and you paid back the interest, that's going to have to be taxed. Other than that, and potential probate problems, which if you get a trust you won't have, this is like one of the best investments. Super secure, passes on a lot of money to your heirs. Again, those of you, I just have to send a message out to you that are wealthier that are doing this, but your kids are not financially literate. Why are you doing that? The statistic of generational wealth is 2.3 years right now, which means your kids' kids are going to blow everything you just did. So make financial literacy part of the trust structure. You can build into your trust requirements that the kids don't get the money unless they're financially literate. I have clients that really have said unless they come to my big table and they work with me and my team, they don't get the money. So take this seriously. Why are you doing all this work? Just to have it all blown. I'll talk to you tomorrow. Let's get smart. All right, so if you've enjoyed this, and I know this is a big one, it's a big one, and there's so much misinformation, please ask us questions. So that's where I want you to go. Go to askloral.com. I have a very fun new membership that's going on out there where you can actually text and talk to me directly during the month, or you can just ask a question for free. So go to askloral.com, ask any question that you want, and right following that question, or you can just make a request, say, send me an application. I'm gonna send you out an application to work with us. I'm gonna send it over to our expert team. We're gonna have a conversation, see if what we're doing and you're doing is the right fit, and let's begin this journey of financial independence is really where you're gonna go with this one.